Hello, fellow Canadians. Today, I'll explain how refinancing works. What is refinancing? Refinancing allows you to access a portion of your home's equity. Your equity is the difference between what your home is worth and what you still owe on your mortgage. For example, if your home is worth $1 million and you owe $600,000, you have $400,000 in equity. You can typically borrow up to 80% of your home's value, meaning in this case, you could refinance to access an extra $200,000 from your home. Who is refinancing for? Refinancing is ideal for homeowners who have built up equity in their property and now want to unlock it. It's especially beneficial for renovations or home improvements. By accessing hundreds of thousands of dollars in equity at the lowest possible interest rates, you can invest in upgrades that enhance your home's value. This can be great if you plan to sell your home in the future, as these improvements will result in a higher sale price. Refinancing is also a smart option for consolidating existing debt. For example, if you've already funded renovations through a credit card or a line of credit, rolling that debt into a lower interest mortgage can help you save a significant amount of money over time. This approach reduces your monthly payments and frees up your cash flow for other priorities. Next, refinancing can be an excellent way to leverage your home's equity for investments. You could refinance and use these funds to invest in your business, the stock market, or even another real estate property. Because refinancing offers some of the lowest interest rates, it's a great opportunity to diversify your financial portfolio and unlock new growth opportunities. You will have to qualify like you did with your original mortgage. If you don't have sufficient income, refinancing might not be the right move for you. For those in that situation, consider alternatives like a reverse mortgage. Click here to check out my video on that topic for more details. It's also important to understand the potential costs involved with refinancing. Many lenders offer programs that cover these fees, so you won't need to pay out of pocket. However, to give you the full picture, here's a breakdown of what these costs might be. If you refinance before your mortgage is up for renewal, you will face penalties for breaking your mortgage. You will also need a title company to register the new mortgage on the title of your property. And the bank will require an appraisal to determine your home's current value. But, like I said earlier, most of the time banks will cover these costs for you. And even if they don't, it can still be worth it for you to refinance if the savings or financial benefits outweigh these costs. Your mortgage broker can help you calculate the costs and give you a detailed breakdown of all the numbers per your specific situation. If you don't have a trusted mortgage broker, for a limited time, I'm offering a free consultation to discuss your unique circumstances. Simply click the calendar link in the description below to book your appointment with me. When is the best time to refinance? The ideal time to refinance is when your mortgage is up for renewal. This helps you avoid penalties and fees for breaking your mortgage. To prepare, contact your broker 2 to 3 months before your renewal date. This gives them the time to assess your equity, secure a competitive rate, and take care of all the paperwork. Don't forget to like and subscribe to help us make more videos like this for you. I'm Alexander Gasenko, your trusted Canadian mortgage broker. Until next time.